Good morning, good evening, good afternoon. Welcome to another edition of Ask Kamari. I am Kamari Ellis, and we are on number 6. That's right, day 6 of the Investment Challenge. Before I forget, go over and subscribe to the YouTube channel so you can get updates whenever these videos come out. We got over 24 more coming. It's a 30-day challenge, but I have actually more than 30 mapped out to teach you all about the wonderful world of investing. But today we're going to talk about supply and demand. That's an economic term, actually taught in microeconomics. Now I'm going to share a secret with you. I failed microeconomics the first time I took it. Don't tell anybody. Now that's out of the way. Yes, I failed microeconomics the first time I took the class. I was pretty embarrassed. Had a terrible teacher, but no excuses. Came back, nailed it, got an A-, went on, and I actually fell in love with the thing that beat me down. It's kind of a weird scenario that way. But we're talking about supply and demand, one of the most basic economic functions or basic economic concepts in the whole economic world. And it's really the cornerstone or keystone for the free markets and how to explain them. Now, I know you're wondering, why are we talking about economics when you said this is an investment basics video? Well, economics and investments are like brother and sister. You can't have one without the other. The economics really just explains what's happening a lot of times in the overall investment markets. So, like I said, we're going to talk about supply and demand. The first one I want to talk about, though, is demand. And demand is basically how much of a particular good or service that the people are demanding on the market. How much do they want? So when you go to the gas station and see a long line of people waiting in line for gas, you know that gas is in high demand at that particular point. Now, when you think about supply, supply basically represents how much the market can offer. So how much gas is available for people that are demanding it to actually buy and take a part of, or fill up their gas tanks with. So it's pretty simple, but everything basically drives, or supply and demand drives everything. Now, there's one more factor I like to talk about that a lot of people don't talk about, and it's human nature. Fear and greed. Most human beings are fearful, and many of them are very greedy. And so when you're greedy, a lot of times you want to try to either buy all that you can because you feel it's at a great price and you'll be able to sell it later on. And so that mindset, that psychology plays into the whole supply and demand equation a lot of times. So when oil hit an all-time high in the summer of 2008 of over $140 per barrel of oil, you saw gas prices go up because gas and oil prices are linked. Now, another way to think about supply and demand is, every time there's a major snowstorm or some kind of catastrophe, when you go to the supermarket, usually all the bread, eggs, and milk are gone. So those are the most highest demanded items at that particular time. And the supermarket only has a limited supply, so they usually run out. Now, if this was a market economy where we could get different factors, you would actually see the price of bread, milk, and eggs go up every time we had oh man, I'm at a deficit here. Every time we had a blizzard or a snowstorm. So I'm here in Philadelphia, and we have those quite a bit. I mean, we've had them a lot this year. So that's supply and demand, quick and dirty. That's it. Next is day number 7, and we will be talking about the business cycle in day 7. I want everybody to understand that. So don't forget to subscribe to the YouTube channel, and we'll be back tomorrow with day number 7. So long, and have a great day. Bye-bye.